and thank you everyone for attending today's webinar, Fraud Detection and Prevention, presented by Bill Lewis and Vincenzo Toppi of CohnReznick. Please be aware that there will be a question and answer portion today at the end of the webinar. To avoid frequent interruptions during the webinar, please type your questions in the question box located to the right of your screen. They will be answered in the order received during the question and answer portion. Additionally, an electronic version of this presentation will be emailed to all participants following completion of today's webinar, and a recorded version will be available on the website for members only. Again, NJMGMA would like to thank you for attending, and I'll now turn things over to Bill and Vincenzo.
Thank you very much, Alex. Good afternoon, everyone. My name is Bill Lewis, and before we begin our presentation, I would ask that we just all take a moment to remember one of our family members who has sadly left us way too soon. Ed Ludwig, a former New Jersey MGMA president and a passionate champion of continuing education for healthcare professionals, will long be remembered as a consummate professional, dedicated MGMA leader, and a dear friend to us all. Today's presentation is dedicated to and honors the late Ed Ludwig. Thank you. So without further ado, let us get into the subject matter of fraud detection and prevention in a medical practice. Fraud occurs more often than one would think, even in the best of run practices. Well-run practices may think they're immune. Fraud is committed by very loyal people that one would never suspect of being able to do something so terrible. Today, we're going to discuss the elements of fraud, provide insight as to how to identify a potential fraudster, and give you steps that you can take in your practice to prevent it from occurring and detecting it if and when it does occur. I suspect that many of the practices participating in today's webinar have been indeed the victim of some level of fraud or embezzlement. For those who have not, I suggest you ask yourself this question: how do you really know that there isn't any fraudulent activity going on inside your practice? We hope that our presentation today will help to educate and inspire you to think critically about the areas of exposure that exist in your practice.
Good afternoon, it's Vinny from CohnReznick. Want to share with you that fraud has many different definitions. Some are intentional or deliberate acts to steal property, money, funds through deception of an organization, or it's misrepresentation of facts or financial information. The fraud is perpetrated by a number of individuals, both internal and external forces. Could be physician owners, employed physicians, administrative staff. Externally, I mean, everybody here today hears about hackers and third-party risks, but your vendors and your patients may also pose risk to your organization.
Yeah, and Vinny, there are some typical examples on the screen right now of different types of fraud we've seen in medical practices. It ranges across the board. It could be a doctor financing an extramarital affair or some other vice, a gambling habit. We've seen that before. The second item on the list, this is a very real case that happened to one of my clients a couple of years ago. The receptionist was taking kickbacks from a competitor practice around the corner. Call would come into the practice. I want to make an appointment with Dr. Jones. Well, I'm sorry, Dr. Jones is pretty well booked up, but Dr. Smith around the corner is taking on new patients. Why don't you call Dr. Smith? And it turned out that, how did this get caught? Dr. Smith calls Dr. Jones after a while and says, oh, by the way, thank you for sending me all those patients. There was cahoots between the two office managers, and this stuff really happens. It could be an assistant stealing prescription pads. We've heard numerous, way too many cases of that over the years. One of my other favorite situations, I have a client who many years ago called me up. It was a one-person office, small practice, and he had his office manager go on vacation. So he had his wife come in and just answer the phones and open the mail every morning. The wife opens up the desk drawer and finds a stack of unsubmitted HCFA forms, going back a couple of years. So my client calls me up and tells me this, and I tell him, well, you need to fire your office manager. He says, well, that's just it. I don't ever have any experience firing somebody. You got to come up and help me fire her. So, of course, we did that. There are a lot of reasons why she may have done that. She was just way behind on her work. She wanted to cover her tracks. She was a loyal employee. She'd been there for 20 years and rarely took a vacation. These are telltale signs of who might be committing a fraud in your practice. It can really be anyone at any level, at any time, for almost any reason. And Vinny, I think you're going to take us through some of the examples of this that you've encountered.
That's right, Bill. And you hit exactly upon what you hear related to fraud and fraud cases, what the profile of the perpetrators sounds like. There's an organization called the Association of Certified Fraud Examiners, and annually they prepare a study of fraud cases that have occurred in the last year, and they give you some background information and some stats from those studies. This is all based on the 2016 Global Fraud Study. The biggest type of fraud that takes place is asset misappropriation. Those are payroll expense reimbursement schemes. Those are billing, fictitious services. That is when someone is stealing cash from an organization. Corruption. Those are when somebody is wrongly influencing a business transaction and pressuring vendors or a organization to go with a specific vendor. And then there's financial statement fraud, falsification of statements to your loan, your bank, your insurance company, overstating revenue, understating expenses. Those take place as well.
Yeah, and just to interject something, today we're really discussing fraud that is perpetrated against a medical practice, as contrasted with fraud that perhaps a medical practice is perpetrating against third-party payers. Billing fraud is its own, its own subject matter, very deep, very serious, very important, but outside the scope of what we're discussing it today. We're looking to help you see how you can prevent fraud being perpetrated against your practice.
And it's important because the study has some very clear statistics on what the cost of fraud to an organization is. And these aren't anything new. These statistics have been pretty consistent over the last 5 to 10 years. A typical organization loses 5% of its annual revenue to fraud. 5% of annual revenue. Top line. So just think about that for a second. The median loss or theft for each fraud is approximately $150,000. And the fraud typically lasts about 18 months. And we'll talk a little bit about the types of fraud and who perpetrates them and how long they last in a couple of slides. This is another representation of the length of a fraud and what the losses amount to. And the third and fourth categories, 13 to 18 and 19 to 24 months, that's where that typical an organization where the fraud occurs more frequently. It's somewhere about 22 to 25% of all fraud cases reported. And then as you move right, you see that as the fraud cases last longer and longer, the impact of the dollars to the organization increases, but the frequency of those cases decreases. And that's pretty important to understand.
And these are across all industries, these statistics. I think you have some information about healthcare specifically, Rennie?
That's right. That's right. The slide that you see up here is they've categorized the fraud schemes by industry, and the healthcare industry is grouped together. That's the column that is boxed out in red. And the biggest fraud scheme is a billing scheme, closely followed by corruption and expense reimbursement. So these are how your organization will will lose dollars, that 5% of top line revenue, that's the average on a regular basis. So who perpetrates the fraud? We like to refer to them as that rogue employee, and we break it down into two very distinct categories. The first category is the easy one. It's the employee that openly ignores company rules and flaunts, expense accounts. Think about a flashy salesperson going out and taking everybody out to lunch and no legitimate business purpose, expense report fraud. Those are quick. Those are something that's easily seen. But you hear about these fraud cases and you hear about that long-term, that trusted employee, and you always hear, oh my God, I never thought Bob would have done something like that. He was here for 20 years. Well, for those 20 years, Bob was dipping in the till, and that's how these things perpetrate.
Yeah, I have not a Bob story, but a Mary story, Vinny. Long-time bookkeeper at a client. She'd been with the practice for about 20 years, and probably hit some hard times personally. She started writing checks and charging them against a patient refund account, $100, $150, and going into QuickBooks and changing the payee to, Jane Smith, or whatever the real patient name might have been, but the actual check had her name on it. And the practice might have never realized it until she got a little greedy or careless and wrote a check to herself for more than the limit of the check cashing service she was going to every week that cashed these checks. So the check cashing service called the practice. Luckily, she didn't answer the phone. She was there with the check, and her fraud was caught. And I know you're going to talk later about how fraud is caught. This was dumb luck, and I think we're going to find out later on that that's one of the key ways, unfortunately, that fraud is uncovered.
Absolutely, Bill. But again, these two types of employees, they're handled differently. There's different concerns with each of these employees, and we'll discuss that in a couple of slides. Examples, some limited examples. I mean, there's hundreds of schemes out there that employees and fraudsters will come up with, but these are some of the most common themes. The violations of a company policy, the theft of client databases or client information. And how many times have someone left your organization and maybe taken a customer list or a vendor list with them to assist them in their new endeavors? Vendor bribes and kickbacks.
Yeah, and Vinny, to interrupt, that takes on an extra special meaning in the world of healthcare because of naturally the HIPAA restrictions and deep fines that are levied against practices for theft of personal protected health information. So it takes on an extra special component and meaning in a medical organization.
Absolutely, and that's where then the single action is compounded. You not only have theft of information, but then you have to deal with the repercussions, the investigation, and maybe any fines and penalties that you as an organization have to face because you didn't protect that information from walking out the door. Continuing on, talking about the profile of a fraudster, the ACFE found that dependent upon the employee's role, that the dollar amounts and the frequency of the cases and the fraud were in direct opposite to each other. 41% of the cases were the fraud was conducted by lower level employees, $55,000 or $60,000 in median losses. Managers, 37%, $170,000 of losses. Then you had company executives and owners. The amount of the cases drops dramatically down to 19%, but the average loss per case is in the hundreds of thousands. And that shows you that, the employee role, the availability to manipulate information for an organization, that the roles as you move up the chain, up the ladder, the larger the losses. Also, the average age just falls in line with the role and responsibilities. You see as the as you move from left to right, as the employees are more experienced and older, the frequency comes down, but the dollar impact increases. And that's really because also the type of fraud that these individuals are conducting. When you get up to the executive and owner rank, it is more of a financial statement fraud, billing schemes, defrauding insurance companies, defrauding banks and any sort of financing entities by overinflating revenues, overstating assets, and that's what typically occurs at those levels.
And I would add, understating their taxable income on their tax return.
Internal fraud can be classified. It also, by the way, that the fraud is concealed. On the books fraud, that is a fraud that is a type of fraud scheme where it leaves an audit trail, easy for others who are looking for it to detect it and find it. It may occur and go unnoticed, but there's always a trail. And Bill and I will talk about a couple of different roles and responsibilities that and segregation of duties that should be considered at your organization so that you can detect these type of disbursement schemes and other frauds that occur. Off the book fraud, that is a fraud that is harder to identify. It's harder to detect and protect yourself against. This is an instance where an internal and external resource may collude together. This is Bill's example of sending patients to another practice between office administrators. It could be a relationship between someone within your organization and a vendor to use one vendor's products over another. And that individual receives kickbacks either in monetary form or vacations, timeshares, whatever the arrangement can be. Those are harder to detect, and we'll talk about some of those detection methods in a minute.
Yeah, and Vinny, just to get a little bit granular and talk about some of the specific frauds fraudulent activities that we see and in medical practices. They're broken down into different fraud categories. We're talking mostly now on-book fraud, revenue cycle fraud covering the whole billing collection process. It could involve something as easy as having the front desk check-in person write off the charge for a family member. Why should my cousin have to pay a copay? Those kind of minor things. We talked about issuing fake refunds earlier. That does happen again, sadly. And one thing that I've seen over the years, and it really disturbs me as a professional, and this is often done at the physician level, issuing a patient refund check to Mr. and Mrs. John Doe for $500, happens to be their wedding present, and it's disguised as a disbursement against patient refunds. That's obviously a fraud against the IRS and perhaps a fraud against the other business partners of this individual doctor. So there could be multiple victims of the same fraud.
That's right. It's not just the individual that's perpetrating the fraud. It's not just up the organization. It could be other parties that get involved and dragged into these situations.
Correct. The second broad area is theft of practice assets. That could be tangible physical assets like a laptop or other office supplies. I like to use this very minor example, but it's really a good one. Many offices have Keurig machines in their break room, and those little K-cups sometimes have little legs on them, and they walk away by themselves. Over a course of a year, that could be adding up to a very significant, theft of company assets. But it could be something intangible, like Vinny said earlier, theft of the database, theft of information, theft of intellectual property. Those are all assets of the practice that could be, subjected to thievery. Disbursement fraud has many avenues. One obvious example, which we see, is practice administrators, bookkeepers, sometimes a physician, using corporate funds or practice funds to pay for their personal expenses. I had a case not too long ago. A practice administrator was using his company credit card that he was empowered to use for business items to pay for his wife's weekly manicures, going home to Home Depot on the weekends to buy supplies for his house upstate New York. True story. I mean, this stuff really happens. And then the last category of fraud that is pretty common is procurement fraud. That kind of transcends both on-books and off-books fraud. You know, is the vendor that we're paying a bill to a real vendor, and has that real vendor been approved by the practice, and has that real vendor or fake vendor provided the real services that they're billing at the right price? Those are all components of a disbursement process that one needs to focus on.
Right, Bill, and especially when you talk about disbursement fraud, we'll talk about an example in a couple of slides, but it doesn't necessarily have to be a fraud where the funds exit the organization. Circumventing policies and procedures, circumventing internal controls, you know, that is a risk in some of these areas as well. The study found that, and these are trends that have been, again, consistent over the last 5 to 10 years, that there's a couple of detection methods that are typical depending upon the fraud that takes place. Tips, you know, tips from other employees, tips from patients, customers. You know, that's the leading method that an organization becomes aware of a fraud scheme. The second one, which you would think would be higher ranked and something that is more common, is management review. You know, that is where, in a smaller environment where segregation of duties and internal controls, management takes an active role in reviewing information, in reviewing support for transactions, you know, opening up bank statements when they come in and taking a quick scan through them. Some simple steps that, you know, maybe nothing is going on, but it starts to act as a deterrent, because your office and your organization starts to understand that, oh, well, they've really got a handle on this. They're really keeping an eye on it. You know, every week, every month, they look at that bank statement and see what's going on. So it could be a method of deterrent as well.
Yeah. And Vinny, I guess, you know, that down towards the middle of that graph, by accident, that's kind of how the check cashing Mary, the bookkeeper, was caught by accident. And that's pretty high up there, you know, a pretty significant percentage compared to some of the other, you know, methods of IT controls. You know, IT controls is way on the bottom. And I know we're going to talk later about IT and how that can be used, you know, to help prevent fraud and detect fraud. But that's pretty compelling that it's way down on the bottom.
Yeah, and again, it depends on the organization, depends on the type of fraud.
Yeah.
But we'll talk about internal controls, we'll talk about segregation of duties, and I think that's when it'll really come to light where improvements can be made within an organization. You know, you have to be skeptical. You have to have unbiased, but you have to question transactions when you see them. You have to review information and documentation. If you rely upon others within your organization, especially in the smaller office where segregation of duties can become a challenge, you know, to record the customer receipts, make the deposit at the bank, reconcile the account at the end of the month, you're giving somebody the keys to perpetrate fraud and go undetected for a period of time.
So what can management do to help prevent fraud in the practice? I think it starts with a corporate will and a culture that is created and lived every day by the practice leaders, the management team, the ownership team, to promote integrity, honesty, and ethical behavior. You know, I think to you know, the world of Disney and Michael Eisner. It's a little bit off topic, but that famous story that we've all probably heard is he used to walk through the, you know, the park at Epcot and see a candy wrapper on the ground. He didn't just tell one of the staff to pick it up. He would just bend down, pick it up, and put it in his pocket until he found the trash bin. That's living the culture that you want to create in your practice. And if you apply that same concept to even petty little things that could be viewed as quasi-fraudulent, I think that'll have a great deterrent effect. So, for example, Dr. X says to you, I need a reimbursement for something. I'll bring the paperwork in tomorrow. You know, the knee-jerk is, well, he's the boss. Let me give him his reimbursement. You know, maybe the right answer is, you know, I'll be glad to give it to you, but your company policy says I need the paperwork first, so why don't you bring it in tomorrow and I'll cut that check for you. You know, that takes a little bit of gumption to maybe stand up to the boss at times, but that's an example. Really, that falls on the boss. The leader of the practice should not even put you in that position to expect you to breach the controls and the protocols that are in place just to satisfy his immediate need. Of course, he may be testing you, and that's another point to keep in mind. But it starts with a corporate culture and a mindset. And around that mindset, the designing of the proper set of protocols, procedures, and policies that are infused across the organization and that people are held accountable for, and that you have systems that rely on data. You know, physicians make life and death decisions on a constant basis based on data. Well, let's use data to help them control their assets and their practice. Look at the trends. Look at the daily metrics. Look at the number of no-shows that all of a sudden are spiking. That may be evidence of something going on somewhere in your system. Perform a risk assessment, and we do that in the world of cyber, where we'll have an outside company do a penetration test to see if they can infiltrate the barriers that a practice has instituted for themselves. Well, you can do the same thing on operational fraudulent issues, and have a secret shopper come in and see if, you know, I don't have my copay. Can you just waive it for me? You know, those kind of small examples that may give a telltale sign to management of what the culture really is like on a day-to-day behavioral basis. And then assess the way that these policies and procedures are being administered and met. You know, oftentimes physicians do not have a good sense of an awareness of business and financial matters. I've had small practices not pay any attention to their billing manager. So I say to them, at least ask them to give you an account receivable aging report once a month. And the question I usually get from the doctor is, well, what's an account receivable aging report? And then I explain what that is, and I say, look, even if you take that piece of paper and take it home with you and toss it in the shredder, that still has a deterrence effect, and you should at least do something like that as often as you can. It's all about creating internal controls and a good system, setting the tone, keeping people accountable, and trying to do whatever you can, small, medium, and large, to deter theft.
That's right, and Bill, I think you hit upon it. You know, it is trying to figure out how you can prevent these occurrences and then detect them. And it is that tone, and you know, on that slide, there's 3 words that sometimes people see in another context. You know, pressure, opportunity, and rationalization. You know, that is what's known as the fraud triangle. When you have those 3 things available and you're not protecting yourself against those, or you don't have processes and procedures in place to detect those items, that's when fraud's going to occur. And internal controls is internal controls, segregation of duties. That is one way to protect yourself. And the study found that the lack of internal controls, you know, organizations that don't take the time to develop and put policies and procedures in place, or the circumvention of those controls. And typically, who's the person that is, cut me a check, but, we'll get you the support later? It's that tone at the top. So when you take those two categories together, that's 50% of the fraud cases. 50% of the fraud cases are a direct result of lack of controls or the overriding of those controls by someone within the organization itself.
And some examples of good best practices of internal controls are on the slide right now. Make no mistake, as it says in the bottom, no system is fail-safe, can be a fail-safe system. We try to institute the best practices wherever we can, and teach management to put the right amount of oversight and involvement to each of these items. But there's some of these, and many of these are obvious and intuitive to everybody, but segregation of responsibilities. You want to create a check and balance system so that the person who's receiving the cash isn't writing out the deposit ticket and going to the bank, or nowadays scanning the bank deposits through the scanner. You want to have that segregated among, at least two parties. You want to, make sure, and this is pretty common now, but make sure that every patient signs in every day. But that's only step one. Step two is take that list at the end of the day and compare it to the schedule and see who the no-shows were and see if somebody got seen without a charge going through or without a copay coming in. Oftentimes, many practices don't even pay attention to this, but if for not a lot of cost, you can ensure the practice and bond your key employees on an employee dishonesty policy. Oftentimes, it's an add-on to your existing business policy that the practice has. For not a lot of money, you buy a layer of protection in case there is a theft or a defalcation. Reconciling and batching the daily receipts to the practice management system. That seems like something very basic and obvious that we all do every day in our practices, but I have to tell you that without getting into a lot of detail, I have had one major issue, it turned out to be an IRS matter, where the practice was very consciously not doing that. And the reason they were not doing that, meaning they were not matching the deposits per the practice management system to the deposits into the bank and QuickBooks system, because the owners were skimming significant amounts of cash from the practice. Now, there's a lot of things wrong with that, but one of the big things is that they now have created a situation where they've put their staff on notice that it's okay to steal. Let's look at me, I'm the doctor and I'm doing it. Well, that's not a healthy system to deter fraud and abuse in the practice. One quick point about the last item, a locked safe for keeping cash on hand. Vinny's smiling at me right now. Just a couple weeks ago, a client of mine called me up and he said, Bill, I have a big problem. It's small, but it may be a big problem. We found that there's a couple $100 missing out of the cash envelope that we lock up every night. Well, we went in and we re-looked at some of their controls. We gave them some recommendations, one of which was don't keep it in a flimsy locked drawer in a cabinet. Invest a couple $100 and buy a safe and lock it up in a safe. It turns out the fraudster was caught on a video camera that they installed, and he was opening up the drawer above the locked drawer, which was unlocked, pulling the drawer out and reaching down into the locked drawer and taking out the cash. Small things can create a lot of havoc and a lot of problems, and that particular practice, I know, has taken the right steps to mitigate this going forward and prevent it from happening in their future. So every system is different, every practice is different. Find the right practices and procedures that are as appropriate as you can make them for your practice. Keep your eyes wide open and, like Vinny said earlier, employ a healthy skepticism to everything around you.
And we like to refer to those indicators as red flags. We always look for those flags when we start an analysis when something is suspected. And we like to say, you know what, one flag is not an issue, two flags, you start to think about it. When you start to see 3, 4, 5 flags for a breakdown of internal controls, certain transactions that may pass through. You then have to start to say to yourself, something's going on, and how do I get there? And how do I determine, what the impact is to me? And transaction testing and data analytics, there's some strong tools available to everybody today in Excel. Excel has built in some data tools within the application itself, and there are some great free add-ins that work within the Excel environment. So you don't have to learn a lot. If you're comfortable with Excel, we'll show you in a screenshot on the next slide some great testing you can run. But we said earlier, these transactions usually leave a trail. It starts with some sort of source document, a disbursement, a check, and there are data points that you can use. Everything today is exportable to Excel from every financial system, for every patient system, and you can start matching up from your cash receipts back to your patient system. Who was here for a visit on this day, and who don't we have a cash receipt for on that day? And you can do other testing that we'll get into here. Vendor testing from a disbursement fraud, duplicate invoice, vendor address matching. I like to do a couple of different address matching exercises. I like to find the same vendor name that has different addresses, the different vendor names with the same address, and you say to yourself, well, why does that matter? An employee who has access to the vendor database may have the ability to duplicate an invoice and cut a check for an invoice made out to a phony vendor. What we also do is we match and bounce the vendor addresses against the employee addresses to see if vendor checks are being mailed to an employee's address. And again, it depends on the organization. It depends on what you think is going on. But these may be important tests that you look at. Most of these systems, Bill tells me that most of you guys are on QuickBooks.
Yeah.
QuickBooks has a great audit trail. When I get involved with an investigation with someone who's running on QuickBooks, the first thing that I do is I ask for the administrative backup file. I get the audit trail, and I start looking at who voided transactions, who went in and changed and edited transactions after they were posted. And then you start to ask yourself, well, why is that individual going in and making these changes? Maybe another red flag. And then in cash testing within QuickBooks and the audit trail, we like to run certain tests to see transfers that occur and also non-cash entries. And now these non-cash entries, they're not coming from the disbursement system. They're not coming from the cash receipt system. These are entries that are posted as journal entries to the cash accounts. Should be very seldom, should be very infrequent, and there should be an explanation for every single one of those transactions that occurs. I actually was involved in a case once where at the month end, the bookkeeper couldn't get the bank rec to work, and she would post a journal entry for the unreconciled amount and then rerun a bank rec and clear that journal entry. All of a sudden her book's balanced. So, it's having an understanding of what's going on within your organization. Quickly want to show you a screenshot. This is active data. This is within Excel. So you'll see at the top there, it has the familiar Excel commands in the ribbon. Active data installs right in the ribbon. And what we did here is the company was concerned that the financial individual was self-dealing and had relationships with vendors that were related to family members, and they were overpaying for certain products. And what we did is, one of the tests that I mentioned before is a duplicate test. And what we did is we ran a test where we extracted all the disbursement information from QuickBooks, put it into Excel, and then ran an active data filter against it where we looked for items that had the same invoice number but different check amounts, the same invoice number but different vendor names, and other related vendor tests. And the one test that popped out a lot of these red flags to us was when we looked at the same invoice number with different check numbers. And as we started to investigate further, we found out that the bookkeeper was actually circumventing internal controls and policies. The organization had a policy whereby anything under $5,000 she could sign off on and requires only her signature. Anything over $5,000 required dual signature of the company executive. The company executive, according to her, was someone who was never around, traveled a lot, and she needed to pay a vendor $15,000 or $22,000. So she would cut multiple checks against the invoice at $5,000 increments to pay off that invoice. She was paying the vendor, she was doing what she needed to do, but obviously she was circumventing policies and procedures. And once that someone figures out that they can circumvent, you're only a step away before fraud impacting the organization.
And Vinny, for the non-Excel people in the audience, QuickBooks itself has tools. You have vendor reports, and you can run a general ledger by vendor and be able to see unusual activities at a quick glance. And of course, Excel is a great tool. For our larger practices and organizations, we have a much more high-powered tool called QlikView that we use as a data and analytics tool. It almost doesn't matter how you do it as long as you're paying attention to the data. That's the key.
That's right. As long as you're paying attention, as long as the rest of the organization understands that you are now actively involved in the management, and that you're looking at these transactions, it's going to be a deterrent at some point.
And now I'd like to turn to the role that your CPA plays in this whole area of fraud detection and prevention. I think it starts with understanding what your CPA has been engaged to do and what he or she has not perhaps been engaged to do. It's very common that a client or a practice owner would say, well, the accountant prepared our taxes, so everything's good. They ordered in our practice, everything is fine. Nothing could really be further from the truth. Filing a tax return is taking the client's information, their financial data from the trial balance and general ledger, making certain tax adjustments like depreciation, for example, and taking that information and putting it into the prescribed form that the IRS requires to file a tax return. That's the limit of what the accountant typically would be required to do. Maybe they're going to be, reading through the general ledger and getting an understanding of what's going on. But the accountant is typically not looking at every invoice and looking at every cash receipt and looking at every patient transaction to engage into a process that is designed to detect fraud. So a tax return is not an audit. There are ways of retaining your accountant to do a special engagement of various types. You can hire your accountant to do an evaluation of your internal control process to see where your shortcomings are and what recommendations that they can make to help you improve things. You can do an agreed upon procedure. That's an audit, a true audit procedure limited to a specific area of focus. I want to audit payroll. I want you to look at 20 transactions of payroll and tell me if the hours are correct, if the pay rate is correct, if the employee is still an active employee, and if the address is still valid. And within, for using that as an example, within the specific parameters of the agreed upon procedure, the accountant is then taking that information that he or she has found and reporting back to management so that management can interpret it and do what they choose as the next step. So understand what the role of the CPA is and what you need to do to get more valuable information where warranted and appropriate requires a special engagement. Talk to your accountant. I also always try to teach the physicians in the practice a basic primer on how to read a financial statement. We said before about the account receivable aging. I always like to spend 15 minutes with a new client explaining to them what a P&L, what a balance sheet is, what's an accrual, and what's depreciation. All those basic terms. It helps the process along as the practice evolves.
And it's important to be prepared for these events to occur. Just like cyber breaches, fraud. The phrase out there is, it's not if it's going to happen, but when it's going to happen, right? And so you want to be prepared, especially when you're talking about rogue employees, the ability to steal customer databases, information, intellectual property. You want to make sure that your organization has a team with all the disciplines represented. And again, depending on the size of your organization, that may be 1 or 2 people or an individual for each one of these categories. But somebody from finance, HR, legal, if it's IT related, you may roll people in and out of these responsibilities depending on what the action occurred and who was involved. Then you want to make sure you understand if you have the internal expertise or do you need to reach out for external guidance. And especially if you think that you've crossed into some regulated areas, HIPAA or something else, you got to worry about getting attorneys involved, getting your insurance carrier on notice, and understanding who to contact for those incidents.
Yeah, and insurance carrier is an important point you made, Vinny, because medical malpractice carriers, in fact, probably all carriers, have an incentive to help their clients minimize and mitigate risk. It helps the client and it helps the insurance company. And so I would urge you to reach out to your insurance representative and see what risk management and risk assessment programs they offer. Oftentimes they may be at little or no cost, and use that as a potential resource to help you move through this process.
That's right. And this is, these aren't written in stone. As the business environment changes, as your organization changes, it has to be a fluid process in place. Closing thoughts, Bill?
Yeah, thank you, Vinny. So, we talked a lot about fraud today and what some of the profiles of a fraudster are and how to be more in tune to recognizing a potential fraud in your practice. It's about paying attention to details. I think that's the most important aspect. Having that culture in the practice, tone at the top, all the way down to throughout the entire team, and having the right policies with the right professionals at your side, and employing a healthy skepticism every day, and doing the best you can to prevent fraud in your practice. So with that, I want to say thank you to the audience and appreciate the opportunity to speak together with Vinny on this important subject matter. And Alice, do we have any questions that we want to address?
I don't see any questions in the question box. If you have any questions, you can type them in the question box now. And we'll just wait a minute and see if any questions come through. If there are no questions, we'll go ahead and end the webinar today. We will have it up on the website on the members only section, and it will be emailed out. And if you have any questions, you can contact the presenters directly. Thank you, everyone, for attending.
Thank you, everyone.
Thank you.